Welcome to CEO Interviews, a production of Gore Call, in which we take the time to speak to small cap executives about what's going on at their companies. With us today, you're going to love this interview because we know a lot of you are down on cannabis stocks. They haven't delivered, and they've been disappointments. Let's face it. That's not the case with Russ's company. It's a successful licensed cannabis retailer in Western Canada with a history of triple-digit growth since its inception, and they've got 4 major retail locations in British Columbia. They've achieved something that many other cannabis have struggled to do and haven't done by operating profitably and generating positive cash flow. And the timing couldn't be better because StatsCan shows that BC spent more than $315 million on legal cannabis products in the first 6 months of 2022 last year. That's up 24% from the year before. And Canadian adult use cannabis sales jumped 18% in 2022, hitting $4.5 billion. Now, if we ended the introduction right there, that'd be a great intro. We start talking to Russ. But the company's not a one-trick pony. They've also got their corporate learning division on track that has 3,000 B2B customers, over 80,000 users, and the number one training provider of Microsoft 365, Adobe Creative Cloud, and business soft skill. That translates into revenue for 9 months. The first 9 months, $5.5 million. That's up more than 10% from the previous year. The company's not talking the talk, they're walking the walk. Russ, welcome back, my friend.
George, always good to be on the air with you, George. And you are my biggest ego builder. Thank you very much. You make me sound better than I am. Thank you.
Well, I'm actually just telling the facts. Maybe I tell them a different way, but facts are facts at the end of the day, right? And you're delivering some amazing stuff in an industry that is, just quite frankly, you tell me, how disappointing has the industry been, and what is that makes you guys so different that you're able to cash flow, operate profitably? What's so different about you guys?
Well, I think that there's no such thing as luck, right? I mean, luck is when preparation meets opportunity. We are one of the few companies that have a solid backbone in business and management, in global expansion, and we took on the cannabis division, and we're managing it as we would another one of our divisions. So we have inherent expertise in accounting and management and metrics, and that helped. Okay. The other thing that helped us in the cannabis is that we took, we originally had 8 licenses, and not all of them were profitable, and it was kind of a great sweet spot, because I know some companies took on a lot more than 8. And a lot more than 4 weren't profitable, and it dragged them down. I mean, I don't want to name names, but there've been a couple that have performed poorly. So we had, from our 8, we saw that some weren't as profitable, and we and with good business acumen got rid of those ones. So the ones that are bleeding, the ones that aren't making money, we got out of the, we sold them, we closed them, we got them off our balance sheets. And as a matter of fact, there was one that was literally that wasn't performing as well as we liked in Vernon, one of our remote area ones. And we literally just sold it 2 days ago. So that's off our books now because it hasn't been performing great. So, business, inch by inch, business is a cinch. Okay. Yard by yard, business is hard. We look at everything like a game of inches, like a game of football. And if it's not making money, we get rid of it. If it's making money, we add it.
And you had that flexibility, by the way, because a lot of guys, George called Cannabis, came into cannabis, running, gunning, like you said, got all these licenses, all these stores, just assume they're all going to be profitable. And then when they start to realize, of the 15 stores you've got, 9 of them aren't profitable, you can't unload 9.
Oh my God, CanTrust, Aurora,
you're just losing money.
Dutch Love
fist.
Dutch Love had 17 or 20 stores. They just went bankrupt. But yet I know they have 4 stores or 3 stores in Vancouver that are fantastic. Okay. And, but unfortunately the other 17 dragged them down. And that's like the saying, like one bad apple can spoil a whole batch of applesauce. Well, 17 bad apples can too. So we have, our business is in BC. I think BC is a better environment because there is some protectionism allowed to our stores in different municipalities. In North Van, no one's within a half a mile of us. In Cambie Street, no one's within 300 meters of us. In Keremeos, no one's within 2 miles of us. That makes a big difference. Not like the Ontario landscape where you can put them wherever you want, and your competition is fierce. That happened in Vernon as well. They allowed stores everywhere, so all of a sudden, because we were a pretty good store with a great location, we got people on our doorstep, and it's like it's hard to do the business when the city or the province or whoever it be is not giving you a little bit of protection. I mean, they're charging the taxes, they're charging the fees, they charge you everything they want, but you know, a little bit more goes with that, so we can make a business and we can hire some people. Nobody makes money if everyone's losing money. Okay. You
and then
need to have a friendly environment.
that's bad for the industry, and you're back to black market cannabis when everyone starts going
We
under
are,
because
we get the list. We buy the list from the BC government. We see the top producers, the top retailers in BC. I mean, we're out of 450, we're number 13. In Vancouver, we're the highest grossing store in Vancouver. Okay. So I'm very proud of my team. I'm proud of what we do, and I'm proud of our numbers. And we're achieving, I think our best store is about 28% EBITDA. Our worst store is 20, and anything over 20, I think, is pretty good.
Fantastic. Yeah. Hey, your cannabis division makes, give or take, $175,000 a month with some decent valuation metrics, nothing pie in the sky. That could give those a value of 8 to 12 million. Let's call it $10 million. But your market cap is 1.6 million.
That's the craziest thing I've heard of.
How do you account for that?
Well, I think that because a lot of people, they don't discriminate between a good cannabis deal and a bad. Everyone says run from cannabis. I mean, so many companies have gone under on cannabis that they never experience positive cash flow, that people just run from it. I mean, it's the same thing. It's the same thing in the in the mineral business. You got great companies that have coal, that metallurgical clean coal, but that they just run from that deal because no one wants to do coal. Well, I know for a fact that the private companies that are in the metallurgical coal or the clean coal business are making a mint. Okay, but people just run from it. So the public companies that have that, look at Tech Resources. They're trying to split themselves away from the coal right now because people run from it. That's what's happening with cannabis. People are running from anything that has cannabis. But I look at that deal because we have had some soft offers to purchase the cannabis division for between $8 and $12 million, which makes sense on a 3 to 5 time multiple of EBITDA. But my market cap is 1.5 million. So, but Quizam owns all of Quantum. So we know that Quantum is worth, we'll say on a bad day, 7 million. Okay. But the market cap is 1.5. So if you look at the insider reports, look, I mean, I'm on the bid. I mean, here's the CEO of the company is buying
money
most
where
of the
your mouth
stock,
is.
and I'm not going aggressively trying to raise the price. I'm just sitting there. And if you want to sell your stock, the CEO is on the bid. Okay. Because anybody who doesn't see that difference and the potential is not a good investor, in my opinion. It doesn't make sense. I mean, if it was close, then you could say, hey, I'm going to be cautious. I'm going to control my risk. It's not close. Okay, our market cap is around 1.5, and the value of the company for sure is 8 to 10 million.
So, if you're not a seller, are you in a position to be a buyer right now? Because there are maybe some decent stores.
Anybody or me? What are you talking about? Are you talking about the stock market? Or are you talking about retail stores?
No, I'm talking about Quizam itself or Quantum actually acquiring other retail cannabis operations that may be
I mean, we would. I mean, 100%. So we are looking. We're very picky on what we want to buy, and we like to get some good value. There are some people that have smaller stores that would fit into our model. I mean, one of the challenges is that normally if you have a public company that was doing these numbers, my stock should be higher. I could use stock to buy some of these stores, or at least a portion of it. But right now, either A, people don't want to take the stock because maybe the liquidity is an issue, or B, I don't want to give the stock because I mean, I have to give so much stock, even for $100,000, and what am I giving away? 2 million shares, 3 million. It's too much stock to give away because I think the inherent value is far higher than what the trading price is.
So devil's advocate, that kind of puts you in a stalemate. I mean, look, in the meantime, you're profitable, so you just sit there, keep making a profit, and operating your, I guess, 3 stores now. If you sold Vernon, you're down to 3 stores. What do you foresee as the game plan over the next
well, we have many options. I mean, there's many options. I'm not saying which ones we favor, but I mean, you look in the situation. Number one, we could pay a dividend. We could start with a 1 cent dividend to our shareholders, and maybe up that to 2.5 cent dividend.
Wow,
I would get on a yield. That would be fantastic potential for us. We could also split the 2 divisions off into a cannabis division and a IT division. So then we have 2 public companies, and all of our shareholders get the benefit of 2 companies with the same number of shares. We can then take the IT side, and we have a couple of deals we've been looking at on the artificial intelligence and the medical intelligence field. It could be a really good, a really good area or arena space for on track to get into. Don't forget the education, artificial intelligence and education. We're doing a lot of that right now with chat GPT classes. Okay. Then on the cannabis side, we could use, we could use that to then acquire some, to increase the revenue on the cannabis side, increase the profit. And then I think there's going to be a time when the US goes totally federally legal in cannabis. And we could be more patient on the cannabis side waiting for that to happen, because I think there would be a lot of capital available for expansion and or acquisitions, because they're a monster market, but it's a little bit tame right now, because although it's legal from state to state, it's not legal federally, and that causes some problems. It even causes problems up here with banking. So that area needs to clean up. But meanwhile, if you're cash flowing 150 or 200,000 a month positive, we can't afford to be a little bit more patient on the cannabis side.
I like the idea of the dividend, by the way, because you'd be the first cannabis company for sure that I know of, especially small cap, micro cap, that's actually paying a dividend. And a 1 cent dividend right now would be like almost like a 30%. Almost, it would be yielding 30% basically.
Well, 100%. I mean, we bought our Cameo location. We paid over $1 million for it, 1.1, 1.2 million. We paid for it out of cash flow in 14 months. So we have the cash to do that. That was just paid off a couple months ago. But now we're starting to build up our cash. But yeah, that was paid over $1 million out of cash flow. And that is, so we can obviously do it. And a dividend right now at 1 cent wouldn't even be that much. 1 cent would be like $400,000. Okay.
Hey, do it. I think all of us shareholders would be happy to see that happen.
Do it. Yeah, 100%. Do it. Hey, listen, there's two things that when you want to look at the metrics of this company is that the stock is very, very tight. Okay. Yeah, it's in good hands of shareholders. There's not a lot of liquidity there right now, but there's not a lot of sellers either. I mean, I think maybe there's 2-3 million shares of selling potentially, but after that, it's pretty tight. So this stock, with a good deal and with the right with the right cash flows, I think could be a really, really good positive investment.
I like to talk also of the spinoff, and it makes sense because you got cannabis and you got this on track side, and there's some overlap, but let's face it, they're really two separate companies at the end of the day.
Yes.
Could you see that become? First of all, let's talk about on track, because I said it in my intro that it's got a ton of B2B customers, a ton of users. Of the 5.5 million that you did for the first 9 months, how much did on track contribute to that 5.5 million?
I don't have the financials right in front of me right now, but I mean, I think was it around 500,000? But we did. I mean, but it's really, really been growing. I mean, our March revenue was almost half of that. I mean, in terms of that hasn't even been reported yet, but we've had very, very, very busy March and April. This quarter, this fourth quarter is very, very big. Is going to be big for on track. And
yeah, so I think it makes sense. I think it makes a lot of sense. And shareholders.
And 80% of our revenue right now, we've got a huge campaign that we started about 6 weeks ago, and we're marketing in all the different cities, the big cities across North America, like 20 of them. So we're getting, because we can now deliver using Zoom, like we're on right now. So we can do a class with 25, 30 people, and it'll be different people all throughout the, throughout North America. And we're not just doing IT classes. I mean, believe it or not, one of the biggest courses we're getting demand for right now is called minute taking. Minute taking is something that everyone knew how to do in the old days, but no one has been taking it lately. No one knows how to do minute taking, or Robertson's rules, all that kind of stuff. Huge demand for that. We're getting students from Ottawa, from Toronto, from Los Angeles, from San Francisco.
Didn't even know that was a thing. That's hilarious.
Can you believe it? Minute taking, right? But minute taking, when I looked at the curriculum, it's very strategic and disciplined. I mean, if you're taking minutes for a meeting, it's not, you don't just write down what everyone says. There's like a system to it. And that's a lost system, because I think that was taught maybe in high school when I went to school, but it's certainly not taught now. No one knows how to do it. So that's a popular course, right? Or customer service. That's a big one as well. People want to make sure that they can retain their clients. They know how to deal with difficult clients. They know how to deal with angry clients. There's a system to that. And these are the courses that we're getting huge traction in.
So it's contributing decent revenue. If it's $500,000 for the first 9 months, then you're probably on track for about 700,000 for the year.
Yeah.
So it's definitely a business,
probably more than $1 million, and it's very profitable as well. Very profitable.
And I was going to say, if it's profitable, then it makes a lot of sense. And I think your shareholders would be really happy with that, Russ. But more importantly,
they like it.
It tells the
investors
world
like that too, right?
You know how to run a cannabis division, you know how to run this IT division, this corporate learning division.
Yeah.
Why? Because it comes down to you guys practice sound business principles at the end of the day. You're not running gun, you're not jumping on the latest hot thing, you're doing things the right way, and you've run into a tough market where risk is off for everybody. I mean, look what's happened to regional banks in the,
look
in
at
the US
markets
as we speak.
the markets aren't exactly super healthy right now. Okay, and you've got whenever there's like indecision or uncertainty in the world, you have risk, higher risk, and people back off, right? You got, I mean, there's risk with the Ukraine war. There's risk with our present leaders. There's risk with an election. There's risk with interest rates. It's like chaos right now. It's crazy times. People are just, they're sitting on their cash. They're kind of waiting a little bit. They're looking for the golden goose, for the pot of gold after the rainbow. I think we're going to have that for them. But I mean, we need to prove ourselves first, right? And
I think you have proven yourself. I got to tell you, now it's just a case of, maybe splitting the companies up and let them just take on their own identity. So there's no confusion, but hats off to you guys that you're able to run two pretty different divisions very effectively. And that comes down to just good old school business, Warren Buffett style sound business principles, so that you guys can generate revenue, grow, be profitable. I'd love to see that because you guys are great operators.
It's because my team is so much smarter than I am. Okay, I mean,
clearly.
I'm just up here. They make me look good, but you should have my team on here because they can speak better, they look better, and they're faster than me. I mean, it's unbelievable, and that's what you have to do.
Speak better, maybe, but look better, buddy.
You might have me
top dressed guy of the year.
You might have me there. You might have me there. Okay, thanks very much for noticing that. Listen, just hire talented people and get out of their way. That's the secret. It's not rocket science. Okay, just get out of their way.
Russ, congratulations on running a really great company during a time of great turmoil, both in cannabis and in risk assets in general, and the stock market as a whole right now. And under all those issues, you're still running a company that's growing in revenue, profitable, cash flowing. I can't wait to see what you guys are going to do in a market when things return to normal. And I can't wait to see, we'll have you back soon, talk about, will a dividend come? Will a spin out come? Will they both come? Maybe they'll both come, where you tell shareholders, we're going to give you a dividend and we're going to give you a spin off. I mean, that's going to be up to you guys to talk about.
Let's do it all. Let's do it all, George.
Do it all, right? Be bold. Look, a guy like you, I think you got to be bold. That's what people like to see. But congratulations, honestly, to you and your team on really great results, and can't wait to have you back, my friend.
Thanks, George. Hey, listen, I appreciate the interview. I appreciate the kind words. Thank you very much. Always a pleasure to interact with you.
Look, I got to tell you, it's always great talking to a CEO who knows how to run a business, because not all of them do. And that's a nice, refreshing voice to hear, my man.
Thanks, George.
For everybody at home, you've been watching or been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Russ Rossi, CEO of Quizam Media, trades in Canada, QQ. For friends in the US, QQQFF. For those new to the story, go to the profile page on Agoracom to absorb all of this in a nice, easy layman's format, and then hop over to the company's website, do your deep dive due diligence. Thanks for joining us. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great Agoracom small cap video.